Let's get in Pratik Gupta, who'll be able to, I guess, weigh in better here because he runs the business, exactly that, CEO and co-head at Kotak Institutional Equities. Pratik, good to have you with us here. Good morning. Thanks very much for joining us. So it's not a market question to begin the day, but, just a business question, if you will. And it's not so much about Kotak, but how do you think about what has been proposed with regards to it's like that India's MiFID moment, what happened in Europe. So what's your sense, Pratik?
Hi, good morning, Prashant. Yes, you're right. This is somewhat like a MiFID type regulation for the Indian mutual fund industry. And we're still going through the circular, so still trying to better understand the intent behind the circular. Because frankly, the entire mutual fund industry, as well as the broking industry, as well as the distribution industry is fairly competitive. It's not a monopoly or an oligopoly even. So usually regulators should, globally, they tend to don't really interfere in pricing. They focus more on things like regulatory aspects like, processes, insider trading, investor protection, etc. Pricing is left to market forces. So it's a bit surprising that we are seeing pricing caps in India, and that too now being cut very, very sharply. Obviously, the impact would be quite negative for partly the mutual fund industry and also the distributors and brokers who service or who are very heavily dependent on the mutual fund industry. And we've seen this in Europe where, frankly, this has not really worked out as well, and the regulator's been trying to backtrack. But once you've sort of cut the rates and once the end clients get used to not paying for research, not paying for brokerage, very tough to unwind that. Nobody wants to be the first fund in Europe who will start charging for that. It's a very competitive market over there as well. So let's see. I think this, from Kotak's perspective, we're a large firm. We can probably sort of absorb the hit. But I think it'll be very, very negative for some of the smaller brokers and also for some of the smaller mutual funds in particular. And even the larger funds and distributors, they will be impacted to some extent. And I think you will start seeing resources being directed more away from mutual funds towards other categories like PMSs, AIFs, or foreign portfolio investors. So the end retail investor whom I guess SEBI is trying to look after, they may end up perversely getting impacted because they will not get the best quality service or the best quality distribution, etc. So let's see. I mean, I think this similar circular was there 2.5 years ago, somewhat similar, and subsequently it was taken back. So I don't know what will happen this time, but let's wait and watch.
Pratik, hi, morning. So, just to press on this point, then we have, of course, the overall market to address, and we'll get to that in a bit. The regulator's rationale seems to be that, look, why are you charging the end investor twice for research? You're charging him or her once at the expense ratio level, and then you're charging again as part of brokerage. So, I mean, purely thematically, that sounds like a logical argument, but clearly that's not how it's working out. Now, is it the quantum? Say if the cap was not 12 basis points, if they had, lowered it more gradually, brought it down to 6, 7, would that have been more palatable? And this is still open for discussion, I'm sure. I mean, that's the whole point of having a consultation paper, right? Industry is going to go back to the regulator on this.
Yeah, so I think firstly, let's look at global practices. Other than Europe, most other places it's left to open market forces. And if you go back in the 90s, for example, brokerage rates were as high as 2%, which were bundled rates, including sales, research, execution, everything. And that has gradually come down, even for FPIs, down to 20, 25 bips. And again, it's a function of volume. So it's a free market and brokers charge whatever. Even when we service FIIs, we have different rates for different customers depending on how much servicing they're taking from us, etc. So the best thing in my view is encourage competition, let free market forces prevail, and a gradual. And we have seen even for FPIs, gradually rates coming down. So the end investors, people who invest in the Fidelities and Capitals and Templetons of the world, they have benefited over time from lower brokerage rates. And I'm guessing similarly over there on the distribution side as well. But a gradual decline would anyway happen. So that would have happened anyway.
Yeah. Got that. Do you have on the research side now? Let's get to the market itself. Do you have a view on, capital market theme has been such a big theme, right? And it's created a lot of wealth over the last 4-5 years. Does something like this derail that at all, or you think? I mean, the bigger story is financialization of savings. I mean, and that corpus perhaps keeps getting bigger and bigger. So that's a compounding story in that sense. Maybe earnings will have to tweak a little lower, but will that get made up by volume? We'll let us see. How would you think about this, Pratik, from a stock perspective?
So, firstly, as far as the financialization theme is here to stay, as you said, so therefore the long term on a 5-10 year view perspective, these are great businesses. You will get these regulatory shocks or otherwise other kind of shocks from time to time. But I think the way to think about it, the way at least I would recommend thinking about this is industries or companies which are in somewhat of an oligopolistic or monopolistic position. They're more vulnerable to regulatory intervention when it comes to pricing or, with SEBI or anybody else doing something to control their profitability. So I would obviously, our preference is towards the likes of mutual funds or the wealth businesses where it's an open market, you're competing out there, and if you've got a good business, good product, good people, good service levels, you will hopefully gain market share and continue to benefit from the financialization theme. When it comes to, let's say, exchanges or other kind of market intermediaries which are either monopolistic or oligopolistic in nature, that's where you have to worry a lot more about regulatory intervention. So that's where we would be somewhat careful. The only other point I would make right now is this theme has been talked about quite a lot. These stocks have done very well, and at current valuations, we are finding it a bit difficult to be positive on these from a somewhat of a short-term 1 year kind of a time frame. If you have a slightly longer time frame, then it's fine. But over a 1 year time frame, we think the valuations are now getting a bit expensive.
Okay, valuations are turning a bit expensive. Got that point. Pratik, overall, I mean, when we talk about this whole earnings revival, because the entire market is pinned on two things, I guess. One is this trade deal getting finally signed, but more importantly, earnings reviving, right? Now, in which sectors do you see some hint of durable demand pickup and actually some sort of a move towards that elusive double-digit earnings mark? I mean, if you could just maybe prioritize and lay out the sectors for us.
So, Surupi, that's actually a challenge. In fact, just this morning, we were discussing in a morning call, TVS Motors has guided that second half auto sales for two-wheeler ICE industry will probably be just 8 or 9% or so. So we're already seeing signs and comments from companies coming around that the GST boost or the festive season boost that we saw in consumer demand, that may be petering out, may not sustain. And the fundamental problem still remains job creation or income growth for a large section of the population. And for that, you need manufacturing. For that, you need exports. You need more formal job creation in the IT services sector, the startup ecosystem, which has slowed down in the last 1 year or so. So therefore, there aren't that many sectors, which is why we're still somewhat cautious on the consumer sector, the entire consumer staples pack, and many of the discretionary names also, we're still somewhat cautious, especially given valuations where these stocks are trading at. Some are still trading at 50 times, 60 times even now. So that's one space we're sort of cautious on. But where we think there might be some hope is the banks. The latest fortnight, you've seen credit growth picking up to about 11.5%. We think with the way the RBI is deregulating or liberalizing a lot of rules and guidelines for the banks, especially the large private banks, we think they're very well positioned, even some of the mid-sized ones. But the banking sector is one where not only do we expect growth to pick up, because without credit growth, you will not see the overall economic growth picking up. So that's one. And second, the valuations are also a lot more reasonable compared to, say, 2 years back, and especially compared to the rest of the market. So that's why I think, frankly, banks, insurance, life insurance companies, and maybe hotels, airlines, those kind of companies. Telecom, we're expecting ARPU hikes over there. So let me just pause there for a minute. But those are some of the sectors we like.
Pratik, in interaction with clients, has domestic politics entered the conversation at all? Bihar, etc.? No, not really.
No, not really. Most people are not taking it very seriously. I mean, the general assumption is the incumbent parties will win, which is the BJP-led coalition. So if there is an adverse result, that will be taken as a little bit of a negative, but it's not a major talking point with investors. They are looking more on what is the government likely to do with economic reforms after GST, what are the other reforms they have in mind, and what about government capex and so on. So it's more about those kind of issues. And obviously, there is the global factor about EM funds. When will they start getting money? When will the foreign selling stop? In fact, it seems to have come off, or rather, it's turned around a bit in the last few weeks. So is that sustainable? So that's really more of the talking point, not so much the Bihar elections.
It's just a slightly, it's not more of a, maybe there's a question here, but just wanted to ask you, the Lenskart IPO, right, which opens, I think, tomorrow or day after for subscription. I don't know if Kotak is involved or if you can, are you guys there?
Yeah, we are involved. So unfortunately, I won't be able to talk specifically about Lenskart.
No, I know, I guess you would have guessed where my question was going, which is valuations here, and so much feedback from people, right? And you would have noticed that as well, that while, the promoters and the founders, etc., they tried to sort of reach for the maximum value out there, but isn't it the lead managers and the bankers, etc., who are perhaps to, sort of advise and moderate some of this? But I guess, would you be able to weigh in at all? It's not a question for you on Lenskart, but it's just a broader question, Pratik.
So I think this would be probably a question better for my IB colleagues. But
Right.
in general, typically, as you know, pricing is again determined by market forces, just like what we were talking about in the broking industry or the distribution industry. So likewise, you could have managements which may want, let's say a price of 100. But if investors are there at 60, then there's a big gap. And eventually, somewhere there's a lot of negotiation and discussions happen. And either managements have to come down or investors have to come up. So these are market forces working around, and it depends on various factors, including positioning, sentiment, confidence in the company's growth prospects, flows at that point in time, cash levels at that point in time, overall market sentiment, foreign participation, how that's progressing. So there are so many things which happen. So I don't think beyond a point, frankly, the bankers can't do too much. It's at the end of the day, our guys have to try and make sure the transaction goes through and it performs well in the aftermarket. But again, if you have a group of investors who are willing to pay a very expensive price, then the pricing does move up, and that in turn may negatively impact the performance later on. But usually we do try and make sure that the IPO performs well. But again, like I said, these are market forces, not much we can do beyond a point.
Maybe we'll try and have the people on the investment banking side, as you said, Pratik, and maybe it's a discussion to be had. We'll try and have it. Thanks very much for joining us. Good speaking with you, and appreciate your time here on CNBC TV18. 50 points on the Nifty is where we are at 25,900 and